In the grand narrative of the global economy, a powerful new chapter is being written. It's a story often framed as a simple contest, BRICS versus the world, but the reality is far more nuanced, and as we look toward 2025, the plot is thickening. This isn't just about an acronym, it's about a fundamental rebalancing of economic gravity. Why does 2025 matter so much? Because it represents a critical juncture. The world is still navigating the complex aftermath of a global pandemic, grappling with persistent inflation and adjusting to a new era of geopolitical friction. In this environment of uncertainty, the economic trajectory of the BRICS bloc, now expanded and more formidable than ever, offers a compelling counter-narrative. So let's get straight to the headline number, the core data point that sets the stage for everything else. Over the last couple of years, the collective economic growth of the BRICS nations has been consistently outpacing the global average, and this trend is set to accelerate. Let me show you precisely why that matters, and how this widening gap could reshape the economic landscape for the next decade. We'll start with the official scoreboard. To understand the BRICS momentum, we first need a baseline: the world. What is the consensus forecast for global GDP growth in 2025? The International Monetary Fund, or IMF, pegs it at around 3.2%. This figure represents a steady but unspectacular pace, reflecting the headwinds faced by many advanced economies, including stubborn inflation and high interest rates. It's a world treading carefully. Now, what about the BRICS plus bloc? The projections here are significantly more robust, landing in a range of roughly 4.6% to 5.0%. That's more than a full percentage point higher than the global average. On its own, a 1.5-point difference might not sound dramatic. But in economics, that gap compounds, and compounding is the silent force that turns small, consistent leads into massive, undeniable shifts in economic power over time. It's the mathematical engine of global change. But the BRICS plus bloc is not a monolith. It's a diverse collection of economies, each with its own engine. So, who's pulling the weight? Let's break it down, country by country. First, the standout performer, India. With a projected growth rate between 6.5% and 7% for 2025, it's not just the fastest growing major economy in the bloc, but in the entire world. This incredible momentum is built on three pillars: a booming services sector, a supercharged digital economy fueled by world-class public infrastructure like the Unified Payments Interface, UPI, and a determined push into expanding domestic manufacturing through policies like Make in India. Next, the bloc's heavyweight, China. After decades of meteoric expansion, China's growth is stabilizing in a more mature phase, forecast to be near 4.5% to 5%. The well-documented crisis in its real estate sector is a significant drag, creating a headwind for domestic demand. However, this is being counteracted by formidable strengths. China is doubling down on high-tech manufacturing, becoming a world leader in electric vehicles and renewable energy technology. Strong exports and proactive government policy support continue to keep its massive economic engine turning. Then there's Russia. Despite facing unprecedented international sanctions, its economy has proven surprisingly resilient, projected to grow around 2% to 3%. The key has been a strategic pivot. By redirecting its vast energy exports away from Europe and toward its BRICS partners in Asia, particularly India and China, it has cushioned the blow and reconfigured its trade networks. Brazil, South America's largest economy, is holding steady with growth projected above 2%. Its strength lies in its diversity. It's an agricultural superpower, a major energy producer, and has successfully cultivated diversified trade relationships, making it less vulnerable to shocks in any single market. Finally, among the original five, South Africa is growing at a slower pace, around 1.5% to 2%. It faces significant domestic challenges, most notably severe power constraints. However, crucial infrastructure upgrades are underway, and its strategic position as a gateway for trade in southern Africa provides positive tailwinds. And now, we must account for the game-changing expansion. The addition of 5 new members in 2024 fundamentally alters the bloc's economic DNA. First, Saudi Arabia, the world's largest oil exporter and home to a colossal sovereign wealth fund, driving ambitious economic diversification. Next, the United Arab Emirates, a global hub for finance, logistics, and trade, with its own significant capital reserves. Then Egypt, which controls the Suez Canal, one of the most critical maritime choke points in global trade. Ethiopia, one of Africa's fastest-growing economies with a huge population and significant agricultural potential. And Iran, another major energy power with vast oil and gas reserves and strategic port access. What does this combination create? You have the immense energy muscle and financial firepower from the Gulf states, plus their massive sovereign wealth funds looking for investment opportunities, meeting the fast-growing markets and demographic potential of Africa, all anchored by a major energy player in Iran with key regional trade routes. This expansion isn't just about adding more flags to the group photo. It's about a strategic consolidation of economic leverage. It adds demographic weight, resource control, and financial capital. So, what are the underlying mechanics driving this outperformance? It comes down to 5 key levers the BRICS Plus nations are pulling. Lever number 1 is the explosion in South-South trade. For decades, global trade flowed from developing nations to developed ones. That is changing. BRICS Plus countries are increasingly trading with each other and with the broader global South, creating a resilient parallel ecosystem of commerce. Lever 2 is the deliberate move to reduce dependence on the US dollar. This isn't about replacing the dollar overnight, but about building alternatives. We're seeing more bilateral trade settled in local currencies, like oil sales from Russia to India paid in rupees, and the development of alternative payment systems to bypass the SWIFT network. Lever 3 is sheer resource dominance. With the addition of Saudi Arabia, the UAE, and Iran, the bloc now controls over 40% of global oil production. Add in Russia's natural gas, and the critical minerals found in Brazil, South Africa, and China, and you have a group that holds a stacked deck in the commodities that power the global economy. Lever 4 is demographics. While many Western nations and Japan face aging populations and shrinking workforces, the demographic profile of the BRICS Plus bloc is a powerful asset. A younger, growing labor force, especially in India, Ethiopia, and other parts of Africa, translates into a larger consumer market and a more dynamic workforce. And lever 5 is targeted investment in infrastructure and technology. Institutions like the New Development Bank are channeling billions into building the essential hardware of the 21st century economy. New roads, power grids, deep water ports, and the digital rails that enable modern finance and communication, all within the global South. So, what does this all add up to? When you combine these growth engines and strategic levers, what is the result? You get a bloc that already represents over a third of global GDP and nearly half the world's population, and which is now consistently growing faster than the global average. And if that trend persists, influence inevitably follows growth. This isn't just about numbers on a chart. It's about who gets to write the rules for global trade, who sets the technical standards for the next generation of technology, who directs the flow of global capital, and how critical resources like energy are priced and traded. But it's crucial that we remain clear-eyed. The BRICS Plus narrative is not a simple story of unchecked ascent. The bloc faces significant internal and external risks. China's unresolved property crisis and high levels of local government debt remain a major source of uncertainty that could spill over into the broader economy. Russia and Iran's deep exposure to Western sanctions creates persistent economic friction and geopolitical volatility. South Africa's chronic power shortages are a major bottleneck to its industrial growth and economic potential. Brazil's long-term trajectory depends on navigating complex and often slow-moving fiscal and structural reforms. Furthermore, this is a club of nations with vastly different political systems and at times competing strategic interests. The growth leadership can, and will, rotate within the bloc, and seamless coordination on complex issues is never guaranteed. Still, even with these very real challenges, the overall momentum is undeniable. In a world economy growing at 3.2%, a bloc growing between 4.6% and 5.0% is operating in a completely different gear. When you combine India's demographic speed, China's industrial scale, the Gulf's immense financial capital, Africa's demographic future, and the bloc's collective resource weight. So when you hear the term BRICS Plus, don't just think of it as a political acronym or a talking point. Think of it as a powerful economic trend line, because right now, that line is pointing decisively up, steeper and faster than the global average. The forces of compounding are already at work, turning a small gap into a significant one with each passing year. The future is never certain, but the indicators are clear. If you want to understand where the economic gravity of the next decade is tilting, you need to watch the gap, because right now, it's widening.